Hey, everybody. Good afternoon. This is Doc Severson and Dave Lukas of 12 Minute Trading. Today's Monday, the 11th of December in 2023, and we have markets on a tear once again, breaking out above 4,600. This is over a 500-point move that we've had since the end of October, and the S&P 500, as well as other markets, are going along for the ride as well, too. So this is quite a change from when we were meeting in late October, wondering if we were, about to tip over the abyss into the next bear, and it certainly was a possibility. But what has happened, what has changed is the market feels like there's a very good chance that the inflation has been tackled and that we're going to get some type of soft landing, and the Fed is being backed into a corner on perhaps rate cuts at some point in the future. Now, we'll have more to say about that during today's session, but this has been a very interesting year for us here at 12 Minute Trading, and it's, as always, it's been profitable. So, Dave, what are you seeing in today's market?
I'm seeing this. The S curve going into the euphoria. So there's four phases of a market, right? And they can be on smaller time frames, even larger time frames, but it always is disgust, okay, disbelief, acceptance, and then euphoria. So let's follow this, right? Where were we at end of October? Disgust. Then what happened starting November? We rallied in disbelief. Now that rally over the last week or two has been accepted, and now we go into euphoria, right? So you always hear, don't fight the trend, right? I said, I think we do our free Friday newsletter, the Friday Minute that goes out, and I said, this week's the pivotal week. We've got daily energies all charged up and ready to go. We've got enough energy left in the weekly charts to, continue going higher. And I think, this week we will know which way the trend is going to go. And I expect it, probably higher, based upon the trend is where we're going. And so I think what we're in store for over the next few weeks, unless there is something that is just complete 180 polar opposite of what has been predicted by the markets going into this week with the Fed and CPI. Like if CPI comes in a percentage point, like a whole point above where it's supposed to be, or Powell comes out and says, we're raising rates, right? Unless something like that comes in, I think we go into euphoria, we run these markets up, try to tag those all-time highs by the end of the year, and then I think January is when we get a nice big correction, January into February. I think that's kind of what we're looking at. That's what the typical S does when we get that last parabolic shot that gets everybody on board, then they get faded, right? So that's kind of where we're at.
I wonder if we're truly going to get a correction. I mean, we just got out of a 10%, 11% correction, and it's, this is kind of the same thing on a fractal basis as what we went. Yeah. We just went through a bear in 2022, and finally in June or May or something like that of this year, we finally, got above that trend line, started to break above at that point, 4,200, which was the key. And I'm like, okay, here we go, bull market. And then literally, as soon as we said, okay, tag bull market, 11% correction. And it's like, wow. Yeah. You might be right. I mean, it's like just when everybody feels like it's safe to go in the water again, we may have yet another one. But,
it would be normal. Like if we continue up to all-time highs here, that's, let's just say on the SPX, that's 700 plus points in the span of, 6 weeks to 8 weeks, it would be natural to pull some money off the table. And I'm not talking about anything big. I think you hit tag 4,800, maybe you pull back to 4,600, 4,500, somewhere in there. And then that's your base to just build the rest of the year on and go after 5,000 in the S&P, right? Heck, the NDX is only 500 points today away from its all-time high. You don't think that's going to get tagged before the end of the year? I think that's a pretty easy get, right? So it would have to be something that just is not priced in, that is really, really scary to derail this market now. And I think fund managers are chasing. I think there's just a lot going into the end of this year to get that performance up after 2022. So that's kind of what I think we're seeing.
Yeah, that brings up a whole can of worms about what's going to happen in 24, and I'm not there yet. But
Yeah.
it's I think everybody is still very negative right now about where things are, about housing prices are expensive and rates are too high, and just all the reasons that we brought up in the
Just
past
Yeah, but
past
remember the market, and I have to say this, the market is not the economy.
yeah.
The market can go parabolic while the economy is going to crap. That we saw that during COVID, right? So it's all about the conditions that are in play at that time. And so while we have, the market is liking that inflation is slowing down, but inflation's still up 25% since 2021, right? So that's not doing good for Main Street, right? Anybody is, I think they're doing, I think I saw, because it's Christmas time, they did Kevin McAllister's grocery list that he went and bought for Home Alone. What the price of it is today, it's like 4 times as much as it was back then. So that's still a very real thing. We still have a lot of people going to debt on credit cards. We've got delinquency starting to go up. We've got small business bankruptcies going up. Like, all that stuff is happening. But remember, usually the way these things work is it's slowly, then suddenly. And so we'll continue to plot along, and the market will continue to go up, and then something suddenly will come out of nowhere that in hindsight will be, oh, everybody should have saw it, right? And that's when, maybe just know when the Fed typically starts cutting rates, that's when markets actually dump. So if something comes about that is negative enough where the Fed's like, oh, we got to start cutting rates, then the market will probably sell off.
Yeah.
And so that's what we have to watch for.
Absolutely. The Fed holds on to rates like you can't peel it away from them over their dead fingers. I mean, because that's their only leverage that they have. The same thing happened back at the end of 2018 when Powell said, hey, things are getting ahead of time. I must raise rates. And then he crashed the market right then. We had a 20% haircut at the end of 2018 because of that. Yeah. He misread what was going on. And then he comes along in 2019, the very first week, and he goes, oh, I was just kidding. We're gonna cut rates. And then the market just took off in 2019. But what I think will happen is we will only see rates go down if and when we start to see asset deflation, which is another word of saying, prices are going down, right? Assets are going down in price. This may be a 5, 6, 7% correction, and all of a sudden the Fed's going to be under huge pressure to say enough. Start to bring things in.
And I do think next year you're going to see things get exacerbated more. But remember, it's an election year, and so they pull up all the stops to make things look good in election year. Typically election years are positive, right? So the other thing that's going on, guys, and I've said this before, but I don't know if everybody really realizes it. 34 trillion almost in debt. That is debasing the currency. That is, that continues to go up enormously, and your dollar is just losing value at a massive clip, faster than ever, and it's going faster than ever. When that happens, assets go up in value, not because they're actually gaining value, it's because the dollar's losing value.
Yeah.
Stocks are assets in that sense, right? So markets have a general positive bias over time because of the fact that the dollar is losing value year over year, day over day, month over month. And so the natural tendency is for markets to go up over time. I mean, think about it. Like if you sold at the money puts today, for 5 years out, the market will probably be higher 5 years from now than it is today, right? You'll go through swings and all that type of stuff, but the market's probably going to be higher. Historically, that's what's happening, right? So you have to keep that in mind. And so that's kind of what we're seeing is that positive bias coming back in, coming out of a bear. I think if we tag all-time highs, that obviously cements that we're in a new bull, we're out of the bear, and then that fuels things even more until you get that event, whatever it is, that the Fed starts cutting rates and fear comes in again. So,
well, Dave, I'm going to talk with my hands for a second here. We've got this is the S&P, and this is actually kind of a cool little thing here because we have a fractal pattern within a pattern. So what I want you to look at here is that this little correction that we've had in the subsequent right-hand side of this is a cup a rounded base pattern. It's more of a V bottom than anything else. But, so we have been getting our little, right side handle setting up here. This is very, very common to see a consolidation at the neckline, which at this point is 4,600. And today we're breaking out of. But what I want you to see is that this is a smaller pattern within a much larger pattern, which is the same thing, which is the whole 2022 bear coming up to what may be the 4,800 level. And so Brewhead's got a question here. Don't you think that the previous all-time high would be a natural resistance area for a pullback? And
Yep.
I think that's a good point. So what we may end up having is we're going to get what's called overhead supply up here. And overhead supply, let's make it yellow. So this is where overhead supply, it could be one of two things. It could be, first of all, it could be just outright sellers. People just want to go short. If the market creeps into above 4,800, they're going to take a short position because they think that the reward to risk is good up there. And also what you're going to see is the people that have been long from lower prices are going to use that point to take profits. So they're going to sell to close up there. So that's what causes the overhead supply. So more than likely, we will get some type of what I would anticipate as being sort of a cup with handle when we get up to 4,800. So this is going to look like this. We might poke above it, but then ultimately, I think like what you're talking about, maybe even coming back down and retest 4,600 from above, sets up our handle. And then here's the wild part is that the measured move target for these is the depth of the entire pattern. So if we go 4,800 minus 3,500, which is what? How many points?
1,300 points.
That's 1,300. So add 1,300 onto 4,800, and you've got what? It's
basically S&P 6,000.
Yeah, is it? I mean, I can't even do math in my head right now, but so 4,800. So that would be 6,100, right? S&P 6,100 would be the measured move target for this. So are we saying we're going to get that in 2024? I don't know, but I would anticipate that like what you were saying, that we do get a charge up to 4,800, and at that point, probably like Brewhead says, we may get some type of choppy, difficult price action, and this is maybe in the first quarter of 24.
We'll pull that back up really quick because it's really glaring a few things here to pattern this thing out for the next couple months, if you will. So if you look on the right side, you can see the daily chart is doing the euphoria burst. It looks like as of today, at least unless today becomes a fake out, we'll find out. But that is typically, see that energy given away, and we're starting those last three candles starting at higher. There's your S curve heading for that euphoria, just kind of parabolic final move. And that's coinciding with your weekly chart on the right, which is at 29 for the energy. So you can think of like maybe even one more week. And that's how long that energy on the daily chart, that can be done by the end of this week. That thing could be an exhaustion. So that would take that weekly chart to probably the most exhausted that it's been, right? In 3 years? And so, or pretty close to it. Yeah. It's already rivaling some of those levels right now. And so then it could happen. It actually could all happen in the next week, to where the week after is, we do this parabolic move this week. The week after is kind of like 2 weeks left in the year, right? Kind of a sideways to, just malaise. And then, you get into the end of the year, beginning of January, and you start that sell-off to recharge everything up. And that brings you back down to that 4,500, 4,600 range. There's your base. And then your handle is put in, and then you are ready to go into the next year.
Yeah. So one of the things that I want to remind people is, like, just when you think that what the chart is going to do, like if you guys lived through the 2017 rally, which just when you thought it was done, right? Just when you thought it was done, and how many people said this? It can't go up any higher. All of a sudden it says, oh, watch this.
Yes, I can.
It was like hold my beer, right? That was the
Mhm.
ultimate hold my beer moment where we got in the beginning of 2018. Now we did have to pay for it. We had an immediate correction after that, which makes sense. But that was a level of 16, an energy level of 16. So just when we think that we know what's going to happen, and we had something like this very similar as we came out of the pandemic, which is kind of a similar looking move right now. We had our little chop in the middle and rose into a parabolic high. That was down to an energy level of 20. So don't be surprised, I would say,
Mhm.
if we're able to hit 4,800, even on this impaired level of weekly energy as well, too.
Yeah, it takes several weeks. This is weekly. Can take 3, 4, 5 weeks for that to start turning around, right? So that's why through the end of the year, I think it's a pretty good get. I mean, maybe the best trade right now is just to buy at the money calls, for December 29th and just sit back and enjoy the holidays. Um, that just may be, just if you're speculating a little bit, maybe some fun to have if you've got some coin and want to just, take some profits and put them to work and see if you can get lucky on that gamble. But I think it's fairly, I think the odds are in your favor, I think, with a trade like that right now, or, even selling at the money type things, right? And letting it run away from you. There'll be some chop, but I think overall 2 weeks from now, we're going to be higher.
Yeah, one of the trades that I did recently, this was at the end of November, was I was looking at this. I was looking at this ascending triangle pattern on the Russell. I was looking at the amount of energy that was out there. I was looking at the trend. I was also looking at the very real possibility that this could have been a bear trap, because this is a bear flag, broke to the downside. It was the most obvious trade in the planet that everything was heading lower. And, is this possible? So right now, I'm trying to stay in this with every fiber of my being right now. I'm waiting for this thing to break above 1900. Let's see. If we look at this trade, I can show this on the Russell. And this
on the weekly, though, there's your undercut and reversal, though, which is one of the favorite things that you like to see.
Yeah, so this is what I'm trying to hang on to. So this is the type of asymmetric trade that we look for, where we're paying, in this case, $100 or something like that, and we're looking for a payoff, in this case of, about 900. So I'm trying to hang in there right now and not take early profits, because it's like tempting to just take it off the table. But I'm going to hang in there as long as I can on this, because right now, technically, there is no reason for me to get rid of this, because there is no shortage of energy. The trend is there, and the rest of the market's heading higher. So I'd be a fool to sell out of this thing right now. So I'm willing to risk it, willing to risk the small profits going for the big ones right now.
The Russell has been in that range on the monthly and weekly chart forever, and it's been a pretty safe bet to sell, in that 1600 range. Like I just did a long-term trade on it last week, selling down low on I just used the IWM and sold in the 150s,
Nice.
getting about a 10% return on risk with that thing out into next year and letting it run away from it. I think the Russell has definitely got a lot of catching up to do with the other indexes. Versus where they're at, right? So the Russell actually could be the one that you could see the other indexes slow down. You may only see like maybe 8 to 10% gains next year, but the Russell go up 20, 30%. That could be catch up.
Yeah, we'll see really that canary in the coal mine, that, whether or not the fund managers really want to play risk on. If they do, it's going to be in the Russell, because the Russell's been really the little bastard child for a long, long time. And it's really, I hate using the term oversold, but it's been out of favor. I think that's the best term for it. Is small caps have been out of favor for the past 2 years.
Well, and it's had some wild action over the last couple of weeks. You'd have days where it goes up 30, 40, 50 points, and then the next day it goes down 30 points and stuff. So like right now, I don't think fund managers, they're not sure what to do, because the Russell are those small caps. So a lot of it's dependent on rates. A lot of it's dependent on the employment and that sort of thing. And so you'll see this thing like catch a bid off of a piece of news and then all of a sudden give it all back the next day. Yeah. But it's obviously still climbing higher and stuff. But I think one of these days you're going to see that thing really start to release. That monthly chart is charged up at like 64. 62, at least on my charts. And that thing is right just to take off for a year, in a direction, in this case, maybe up, right? Based on what we're seeing. So,
hey, so before we go any further, I want to let those of you that are joining us live here today, if you have any questions or comments or anything else you want to bring up, let us know in the chat window, and we can address that here in the next few minutes. If you're joining us through a replay, which is probably going to be most of you, then we'd certainly love your questions if you send them to support@12minutetrading.com. And we got one coming in here from Brewhead. I've forgotten what your name is, but I love that username. I think that's cool. I know you guys aren't into history, but
who says we're not into history?
Stock Traders Almanac points out that mid-December through first week of January has Russell outperforming all the other indices 80% of the time. Hey, Mike.
Well, there you go. I would not be surprised to see the Russell take off, and especially after this week, if things come in as expected. I would not be surprised to see the Russell start to at least take 1900 and go from there.
We are going to call it from this point forward the Brewhead effect for the small caps.
Yes, the Brewhead effect. That's what we're going to do.
Yep. That's what it is. Anybody else out there have any other questions, comments, complaints, or dad jokes? Dad jokes are always welcome.
Those are always good.
Yep, in our sessions here. Let's see. Dave, I'm going to bring up the NASDAQ chart if you want to take a look at it, because I know that you're a NASDAQ expert.
I do like selling on the NASDAQ.
And the NASDAQ is having itself a wonderful little day, even though at the very beginning today, the NASDAQ was in kind of weird territory because the Magnificent Seven were being distributed and everything else was being bought. It was the strangest thing. Look at this.
Well,
but like
Apple,
Apple's still down. Yeah. We still have Amazon.
NVDA still down.
Google's still down. We have JD and Lucid and Facebook or Meta still down. So all of these, and NVIDIA's still down. So they've been funding the rest of the NASDAQ on the backs of the Magnificent Seven. So this is Tesla down.
So what does that tell you, right? Like, I thought it was interesting at the beginning of the day, though, because the NDX is the NASDAQ 100. The overall NASDAQ was down, but the NASDAQ 100 was only opened up or down like 10 points, where the regular NASDAQ was down like 70 or something like that. So kind of an interesting thing, but same story here as with the S&P on this. I mean, you can see that S starting to go parabolic. 16,200, 16,700 is all-time highs. I don't see any reason that's not tagged. The energy's at 33, but you can see it can go down down to 25. It's gone down that far or even lower on the weekly. So that's another 2 weeks of trend that's in that chart. And that also, it coincides with the monthly. You see the monthly typically goes down to about 35. That's another, that's ending this month, right? So that's why I'm kind of saying that I think it's pretty easy to run up into the end of the year. And then in January and February is when we will see some problems, because you're going to have exhausted monthly. You're going to have maybe a weekly that's charged back up on an exhausted monthly, right? So you just, can really set the tone by having a nice little pullback at the beginning of the year, take some profits off the table, set a nice level of support, and then just skyrocket up from there. So
there we go.
Could really see a year like 2021 next year.
Yeah. So even though just overall, I think, there's so many people that are so negative right now, and just allowing the news of the day to just get them bummed out. We could actually be finding ourselves into one of these, the market climbs the wall of worry, and certainly there's enough worry out there. And just, if you ever have any doubts, the best thing to do is just turn off the news, look at the price, and let the price tell you what you should be doing, because that ultimately will not lie to you. So with that, I think we have answered all the questions. We are out of time for today. Next week, I'm not going to be available. I think we may, and then the week after that is going to be Monday, Christmas. So we'll figure out something to do in the next couple of weeks here as we put
if I'm available, I might set it up so where I just stream and come on with you guys next week. I just got to look at my schedule too. So we'll see what we can do.
All right. Well, thanks everybody for joining us. And for those of you that are watching this on a replay, thanks for checking us out. Again,
Thanks,
you guys have a great one, and we will see you next time. Thanks, everybody.
Bye.